Hello and welcome to the week ahead. We are in a zombie market. In my humble opinion, we are in a zombie market where the zombies are where the bulls are just trudging slowly, very slowly and erratically upwards. A lot of the time sideways, sometimes slightly down, but overall inching our way up. And I think that for me personally, it's some of the worst trading I've had in a while. And I have had to pull back because a lot of the things that I've been doing haven't been working. So I'm going to talk about the market that we're in, what I'm seeing in the charts each day, and what I think might be coming in the near term. And I'm going to talk about how I've been working to try to overcome some of the challenges that I've had intraday and the changes that I'm making in my intraday trading to accommodate for this environment. And then what I'm hoping for, fingers crossed, hoping for to happen. Okay, so let's get into it. One of the indicators that I use, the most common one that I use is this one here, which is the EMA 12 on any time frame. A lot of people do the 8 and 21. I do the 12 and 26. So the blue line here is the EMA 12. The brown line here is the EMA 26. I primarily just look at this blue one, and you can see here that we basically, since we got above it back here on April 22nd, we haven't really closed below it since. Maybe this one here counts as a close below, but either way, it held. Ultimately, that was a hold and continuation to the upside. And so the thing that I'm just like, one of the things you can notice when you look at this chart is that the gaps, like what you were getting back here, is a move up and a move down, move up and a move down, move up and down, and then we're getting slower moves up, lesser of a move down. Nice move up, but if you didn't catch this bottom, there was no, like you were gapping on these moves. It was difficult. And then a little bit down, a little bit up, over, a little bit down. So overall, the trend is starting to flatline at the top here, right? And this environment over here, all of this, actually all the way back to here, I did excellent in this environment as a trader. In this environment over here, I've been doing not well. For the last 2 weeks have been some of the worst trading that I've had in months. And so, what does that tell me? It tells me that, well, this is not my market. And I've tried everything I could to try to make the most of this and get better at trading these intraday moves, but it hasn't been going well. One of the things that I did recently is I made a new indicator to help me understand trends. I talked about it in my last weekend's video, but I'm going to show it to you again here, which is called my MA rider indicator. And what this does is it takes, you find a stock that's riding an MA. In this case, we have the QQQ riding the daily EMA 12. And it counts the number of times that it gets touched on the way up. So here's 1 touch, 2, 3, 4, 5, 6. So there's been 6 touches on this way up. And if you look at this indicator down here, it says what's the EMA that it's tracking. So 1 day EMA 12. It currently has this little surfing guy on there, which means that the stock is actually riding that trend right now. And it has, in the pink here, it says 6 touches of the trend. And so what's the most it's ever gone? 10. What I didn't do is show you what the median is. I've been thinking maybe I should have, like maybe this is an outlier that it did 10. Maybe it's more common that it does 8 or 6 or 4. Like who knows? Maybe we're already extended. So I haven't done that. But a lot of the stocks that I look at, I'm using this indicator to look at it, finding which moving average is the stock riding. So for example, they might not be riding the daily EMA 12. Let's take a look at PLTR, which everybody knows has been a super strong stock. But as you can see, let me just hide my drawings. As you can see, it's been breaking. Like it had 1 touch here and then it broke there. 1 touch here and broke there. 1, 2 touches broke. Now this is a very strong uptrending stock, so it's definitely trending, right? You can't say it's not. So it's just not trending on this time frame. So I'm going to go to the 2-day time frame and see that's slightly better, but it's still dipping quite far below there. You might even say 3-day. Yeah, that looks pretty good, right? So you got 1, 2, 3, 4 touches on this trend up on the 3-day EMA 12, and on this one, when you look at that, the most it's ever gone on this time frame before breaking the trend is 6, and it's currently at 4. And so I'm seeing this on more and more charts that I'm looking at is they're getting towards the upper edge of the most it goes before it breaks whatever trend it's in. So, and these are stocks like all the semi stocks that I look at that are very strong, like Nvidia, AVGO. Those are the big ones that I'm always watching. But there's a bunch of little ones that were doing really well, like MU was doing fantastic. Let's look at this on the daily. Like this is just an incredible trend that it's been on. And so, yeah, I've been looking at these and they're getting to the halfway or above And so getting to the place where they could be toppy. I'm not calling a top on the market, right? Like my simple statement is still true, which is that as long as this daily EMA 12 holds, the bulls are going to keep going up. But for what it's worth, we're getting near the upper edge of that I'm seeing on a lot of different names. So there are topping signals that are happening for me personally. And then then we get stuff like headlines that are coming that are seemingly more and more serious. But I think Charting Man Dan said it in his weekend video, and I think he's right, is in order for the bears to take over, maybe it gets initiated by a headline, but I think the real rollover, if we get a real rollover, will come from exhaustion, not from a headline, right? Like there just will suddenly not be enough buyers to support the prices that we're at, and things will start to go down. And once it starts to go down, I think everybody's ready for that to happen. And so people, when they see that happening, they're going to do everything from get in heavy on shorts to start covering some of their longs that they've had to hedging like crazy. There's going to be a lot of people that are ready to flip to the other side and send it back down to get a little bit of a healthy retracement, which we could use any time now. I think we're well beyond it because it's a zombie market now. I think that it's getting the choppier and choppier. And I'm also seeing that. So let me talk about some of the ways that I'm seeing that. So typically when I'm trading intraday, I play off levels for what I call level burners, and I look for retracements on uptrending stocks in the morning that retrace some portion of the prior day, but not all the way to the low of prior day, and then hit some level that matters to me. Maybe it's the closing price from the night before. Maybe it's the pre-market low. Maybe it's some point of control. Maybe it's a higher low, an hourly or 15-minute higher low from the day before. And I'm looking for levels that matter where price, it makes sense for it to stop. And what I've been seeing is that in the last 2 weeks, those levels aren't working. Price will come in, test them, bounce a little, and then come through them again. Or maybe it'll come in right to where they are and blow right through them. And then it'll when it goes back up, it'll retrace the whole move and maybe go beyond it. And then it'll come back down and retrace part way and get a higher low and then push up higher and then come all the way back down to the bottom again. So it's not solid trends that you can rely on to get your trades going, right? And so that's really difficult for me personally. I found that in my swing trades, I'm getting risk-free prices moving up and like solidifying the uptrend, and then I won't sell any because I'm confident that the swing is going to work, and then it retraces all the way back and stops me out, which is a big bummer to be like, really, really in profit solidly on a trade and then have it completely erased and you stop out. Now, it doesn't mean that I'm losing money because I did get quote unquote risk-free. I sold enough after the purchase to be at the point where if my stop does get hit, I won't lose any money because I won enough on that first sale that I made. But it sucks to sit there and, like last week, I'd been sitting on a multi-day swing on Meta that was risk-free and doing well, and then it completely erased the whole thing. And to sit through days and days of upside and then have it erased in one overnight session and in one morning it's just sad, right? It's not what you want as a trader. And so that means that in this environment, you've got to take your money quickly. So I found that swings, that's happening, and also intraday it's happening. I'll get into a higher low intraday and it'll start to move up and get some traction, and I'll take enough to get risk-free, and then 15 minutes later I check on it and I'm stopped out and I'm flat for the day. That's if I'm lucky, because I've also been hitting a lot more full stops than I'm used to, where I get into a spot where I think it should work. The bounce is so minuscule I don't manage to get my risk off, and then it full stops me out before I can even adjust. I think I'm at the point now where if I get a decent move intraday and I'm a decent amount in profit, I've just got to take that base hit and book the profit because it's just not working. I also think that the trades that I'm going to take going into next week are going to be a different kind than I've typically been taking. I want to remove a bunch of the things from my tactic list that I've been doing. Like my biggest wins when we're in a solid move up are these ones I just described, where I'm doing level burner trades on retracements intraday, and I have to cut them because I haven't been able to be successful at them. Like all last week, just no luck. Like it's just not working, and so I have to cut them completely because they are racking up to be my biggest red days when I get a bunch of those not working. It's sad but true. I think it's just not the environment right now. I will do them again, but just now is not the time. So what am I going to do? I'm going to show you an example of what I'm going to do instead. Okay, so this is the QQQ, and on this chart right now I have, I'm actually going to remove this indicator. I don't think we even need it, but I have just two indicators on here. Well, three. I have my volume indicator, my custom RVol indicator, which shows when there's relatively higher volume than normal with these very bright pink candles, like this here. And I have the two moving averages that I care about, the EMA 12 and 26 that I talked about earlier. And then I have this other one that I've been tinkering with that helps me to identify extensions. Not going to get into the nuts and bolts of how it works, but it basically is telling me on a couple of different time frames if things are getting extended away from the moving average that you care about. In this case, the 12 or 26. And I'm looking at the 1 minute time frame because what I'm talking about doing here is intraday scalps. And I only want to get the best scalps. I only want to get it when price is like, it's pulled down so far away from the moving average and it's gotten there so fast and it's so stretched that there's absolutely 100% going to be a bounce. Even if it's a short-term bounce that just sets a lower high and then it comes down again, there's going to be a bounce. And I want to scalp that bounce and get risk-free and then hold on to see if I can get a retracement to the prior high that we came from or some portion of that. Just sort of watching price action, waiting to see where it exhausts itself and then cut that trade. And so the way that I do that is, first of all, ignore the open. There's just too much volatility on the open to make this work. What I'm relying on for it to work is some kind of headline or event happening intraday to cause price to react and move very quickly. And last but not least, I'm only doing this on QQQ. It might be happening on other stocks, but I'm not using this strategy on other stocks. I'm choosing the ETF purely because A, it's highly liquid. I don't need to worry about spreads or anything like that. And B, it's more predictable to stay within a range, right? Like if I'm choosing some crazy low float stock, it can go much further, much faster than you could ever want it to. Whereas with the QQQ, it's more likely that it's going to stay a little bit range bound, especially in this environment, right? And so I'm looking for extensions to the downside, specifically to the downside, that I can buy for a retracement to the upside. And so if I zoom right in here, you're going to see some orange dots, right? So these are basically telling me that price is getting extended here on this time frame. Now those are not, I don't see a dot like that and just go, it's go time. There's nothing like that. I need to see a few things. Ideally, we would see it come quickly. This to me is sort of a nice methodical move down. I don't know that I would be that interested in this one. Also, the volume here isn't exceptionally large. But typically, this happens maybe 2 or 3 times a week in the QQQ that there will be a big extension. And so this is on Friday, and there was one right here that was a beauty. So what do you notice about this one here? The volume, look at this volume, is much bigger than all the rest of the day. And it's happening here towards the end of the day, like within the last hour and a half of trading. It had this, it was on a steady move down, and then it was like a pretty decent flush, tried to get a bounce going, and then flushed really hard, really fast. And you can see even here, this was the kind of extension that we saw back here, where you're getting that little orange dot. But here, it didn't, it went much, much further from that orange dot. That's why I don't really trust the orange dots too much. How the orange dots are formulated just has to do with the distance from the moving average on that time frame and the number of ATRs that the low of that candle is away from that. It's a very simple idea. Now over here, what we see is we go from the orange dots to orange X's, and then we get a pink X, which this basically means that it's extended in the same way as I just described on multiple time frames. So it's saying that on this minute, the 1 minute time frame, and on the 5 minute time frame, it's really far extended from its key moving average here, the EMA 12. And at the same time that you're seeing that extension, you're also seeing these high volume candles. And that's what you want to see on a flush. You want to see it climax to the bottom and then get a bounce going. And so, as it comes down here, I'm interested. And you can see we're not getting full body bars, right? Like these candles are not, I'll do some drawings on here. The candle body only goes to there. It doesn't go to here. Like a really scary candle body would be like the whole candle from top to bottom is filled, and then again the next one, the whole top to bottom filled. These are oscillating. This is on the 1 minute time frame, and it's coming down, moving up. Coming down, moving up, coming down, moving up. These are hard candles to buy because you're like, as it's coming up, you're like, oh, that was it. I just missed it. I missed the bottom. Oh well, and then it comes down again. And what if you thought that was it and you went for it? Like, even if you did a decent long attempt here, let's say it came down here and you saw it going up, and you're like, oh, that's got to be it. I'm going to put my stop here. It comes back up to here and then immediately stops you out. And so you need to be, there's a couple things you need to do to do this successfully. And one of them is I'm just like being super patient, waiting for the real signal here, which is like I want to see it extended on multiple time frames, and I also want to see it slow down. And last but not least, you could do this where you'd buy the high of the prior candle as soon as it breaks. It's like a 1 minute stair step trade, which I know a lot of people on the chart guys do. It's probably the safest method, but the thing you've got to look out for there is like, how big is your retracement going to be? Because here on the 1 minute time frame, if I'm doing a scalp like this, my plan would be, as when I enter, I'm looking from wherever I enter. Let's say I entered way down here. I'm expecting it to get to this blue line, wherever the blue line ends up being on the next couple candles, right? I'm expecting it to get to here. And so whenever I'm buying in and I know where the low is, I'm measuring in my mind, wait, how far is it from my entry to that EMA 12? And is that far enough? Is it more than a 1-to-1? Is it a 1-to-2, 1-to-3? Like I want to see that extension get really far so that, when I'm thinking about how much risk I'm going to put on, I can clearly see that the risk from here, if this is the bottom, is worth it. That I'm going to definitely, when it retraces, if this is the bottom and it does that retracement and gets all the way back to that EMA 12, because look what happens. It gets all the way back and then that's where it balances on that EMA. It's just the way it works. It works that way every time. When you find the bottom and you get the retracement, if it's a good retracement, it's going to get to that EMA 12. And if it's actually going to continue to the upside, it will, that's like a big enough move up that it gives you room for that higher low, that subsequent higher low that comes right here. And so really, I'd sell half when it got to there, and then it legs up again. I don't know why this thing keeps doing that. And it legs up again. And as soon as I'm looking for that to top out, right? So I'd be following, maybe I would have switched to the 2-minute time frame or the 5-minute time frame, waiting for a candle low to break. And then I would, close out the rest of the position up there just for that little bit of extra if I can get it. And that's it. That's all I'm doing. I'm like trying to get a bottom, trying to get a move up on it, and then like hope that's it, and just take my profits and go with it. And that's it. I hope that makes sense. I'm just like, I'm trying to do the thing that is the most likely to work in this environment, and this requires an immense amount of patience. I tend to not be the most patient trader. I want action, but if you want to succeed as a trader, you've got to learn patience. And until otherwise, the simple statement is, if stocks are holding daily EMA 12, the zombies are in complete control. And, I guess one last thing I should talk about is what happens if we lose the daily EMA 12? What did it look like in the past when this happened, where we had huge dips? Like if you think back to the CVID dump, like look what happened here. Like we had this huge dip and then it just kept going and 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 going. But I look at this and I'm kind of jealous of this market, because look at these nice red days. Look at these dips that they got all the way up. These are beauties. And that's not really what we're getting right now. We're not, here's one. That was back when I was trading well. This is hard. This is much harder. So I'm jealous of the nice red days that you had after that leg down back then. And I don't see any good examples of where we're going to get nice dips here, but I'm hoping that we do. I think to see a break of this trend, first of all, we need to see a daily candle close below the daily EMA 12, period. That would be like a number one thing I'd want to see. Just looking at the QQQ chart and looking at no other charts, just QQQ. I want to see a daily candle close below the daily EMA 12. I would want to see a confirmed daily higher low, like this one here. I would want to see us close below that, right? So from this top, close below this candle somewhere down here. And then I want to see a lower high. I don't even care how much it retraces. I want to see some kind of lower high and then another daily move down. Now, to give me confidence that we were going to get a serious retracement here, I would want to see the same thing on XLF, something like, I wrote here a 2-day rider, so let's go to the 2-day. You need to see it set a lower high and then come down below that one. That's probably more likely, something like that. There's something Charting Man Dan at the Chart Guys talks about a lot, is all major sectors at the lows together at the same time. So what that would mean is, another way of saying that is a lack of rotation to other places. We want to see money completely flowing out of the market instead of going from one place to another. And that doesn't mean that that a top is in. That doesn't mean that it's all over. It just means that we're finally going to get some retracement. And that relief, for me personally, would be very welcome, because I think that if we got that kind of relief, then we would get, price action that for me is more tradable. I would be very welcome and open to that. I think a weekly higher low after, I don't think we're stair stepping, but a nice retracement back into like this zone here. Oh, that'd make me so happy. Retracement to here, right? Would be awesome. Or to fill some of these gaps we made up along the way, like fill this gap to here, something like this, and then up. That would, oh my God, can you imagine what a gift that would be? So yeah, that's what I'm hoping for. And I'm like, please give me that, because this is a tough market. The zombie market is tough. Okay, I'm going to stop it there. Have a great week. Good luck out there. Hey, if you like the content on my videos and you like the indicators I produce on TradingView, please remember to like and subscribe.